Another day, another downturn in the market, it seems. Today, on Monday, we are looking at another downtrend in the S&P 500 and essentially the US stock market as a whole. This is the first day of the week, but I think it's going to be a really eventful week, and it probably is going to continue in this fashion. Now, do bear in mind the significance of the drops that we're seeing. Today we're looking at 2.7% down. Over the past 5 days, this trend has not alleviated. From the highs that we were at the week to the lows that we've seen this drop by around almost 5%. And again, this is not an insignificant change in value. Let's just have a look over here at this article briefly, which speaks about the fact that the S&P 500, the Nasdaq, and also the Dow have had their worst day since 2022, as there are a lot of recession fears. By the end of the day, we were seeing the Dow drop by nearly 1,000 points. US stocks plunge with a tech-heavy Nasdaq and the broad S&P 500 posting their biggest one-day drop since September of 2022. This is generally amid heightened risk of recession after Trump would not rule one out. And again, this is significant, but we'll get to that in a second. The thing that I want to focus on from this article, or the bit of information here, is that we are looking at a trend across the broad markets. We're not looking at something perhaps mainly focused around tech or anything specifically. It is a broad market trend, and the same is happening right now in crypto. Prices are absolutely tanking across the board, and again, if you are into individual stocks or perhaps crypto, a 2% drop in a day might not seem too bad, but again, 2-3% on the S&P 500 down in one day is not a good trend, and it's not a good look. So Trump himself doesn't really rule out the potential of a recession. You just have to look at the articles where Trump said, "I hate to predict things." He essentially did not rule out the potential of a US recession amid trade wars and tariffs and all of these issues that the markets are seeing right now. People are nervous, and even if you don't view the stock market as perhaps the best indicator of economic prosperity, you just need to look at these statistics. You just need to have a look at the way that companies are dealing with things, the way that individuals are dealing with things. The average person in the US, but not just the US, is struggling to pay for everything at the minute, absolutely everything. In April of 2024, 36% of households reported having a hard time paying the bills. And bear in mind, with the way that inflation is going, with the way that job cuts are going, this is likely just getting worse and worse. And again, this was published in April of last year, the best part of a year ago. Imagine what those figures might look like now. It certainly is a very worrying trend in today's market. And again, like I say, these drops might not seem significant, but what I also want to highlight is the trend that we've seen in the US stock market over the last, let's say 5-10 years. We are at all-time highs. There's been people calling for a long time that the stock market as a whole might be quite overvalued. A lot of people have been suggesting this. And the thing is, at some point, it's likely that there will be an inevitable downturn. However, with the prices that we're at right now, with a lot of people already calling this a very risky spot for investing, a very risky spot for the potential of a recession, with jobs being laid off left, right and centre, people struggling to pay the bills, it certainly isn't a good look. And again, with investors fearing more and more about tariffs and other issues, this could just be the last stage, the last thing needed to potentially pop the stock market bubble that we are seeing right now. Do let me know your thoughts on this in the comment section. Thank you for watching, and I hope I will see you in the next video again. Goodbye for now.